Hello there, you're watching Targets in Focus, where we'll be taking a closer look at a selection of currency pairs we know you'll be interested in. Today, and with the Federal Reserve meeting in mind, we're looking at the euro dollar, the pound dollar and the dollar yen. Well, joining me on the line now is senior analyst Michael Hewson of CMC Markets. Michael, nice to speak to you again. So, splashdown for the Fed meeting is a matter of hours away. Let's start with your projections for euro dollar. Are you expecting it to go anywhere at all this side of Christmas?
No, I mean, if anything, I think euro dollar's got a fairly firm tone to it, irrespective of what happens at the Fed meeting this month. I think whether or not the Fed taper today or they taper in January, pretty much a $5 or $10 billion taper is already priced in. It's certainly priced into the bond markets. The fact of the matter is the Fed will still be expanding its balance sheet to the tune of $70 to $75 billion a month, irrespective of whether they taper today or taper next month. So that's going to be fairly supportive of the euro, simply because the ECB at the moment appears to be running out of road with respect to further easing measures. So certainly over the course of the next month or so, I certainly think that the downside in euro dollar is likely to remain fairly limited to around about 136.20, and I think it's certainly going to want to have a go at the 140 level. On a 3-month basis, probably a little bit weaker, simply because I think once we get some idea of what the Fed's going to do with respect to further tapering, that could well be fairly dollar supportive.
Okay, moving on to pound dollar. We've seen unemployment drop today to its lowest in almost half a decade. It now stands at 7.4%. What are your projections for the cable going forward? And surely Mark Carney will be under even more pressure to increase the interest rate in the beginning of 2014.
Yeah, he will be under pressure to do it, but that doesn't mean that he will bow to that pressure. He's been pretty clear that the 7% unemployment number is a threshold or a staging post. It's not a trigger. If you look at the sterling interest rate strip, with that still pricing in the 25 basis point rate hike 12 months out, it was doing that 2 or 3 months ago. So I think the expectations of the sterling interest rate futures markets are still for no rate hike before the beginning of 2015, irrespective of what the unemployment rate does. Fact is, though, I think that the likelihood is that the Bank of England is probably going to be well ahead of the game on a tightening cycle. It's certainly going to feed into a slightly stronger pound going forward, particularly against the dollar. And I think that's one of the reasons why I think that any downside in cable is likely to be fairly limited while the economic data continues to improve. And the likelihood is that next month's ILO unemployment number could actually come even lower from the 7.4% down to around about 7.3 or 7.2. With that in mind, I think we'll pretty much be unchanged on the cable, around about 163, maybe 164 at a pinch. On 3 months, 161, simply because I think once the Fed starts to taper, and I think that they will taper, I think the market will start to price in additional tapering, and I think that in itself should be fairly dollar supportive, but certainly not massively so.
Okay, finally, Michael, the dollar yen. The dollar has risen further against the yen and is almost at a 5-year high. Ahead of the Fed decision, this, of course, has been priced in by the markets, hasn't it?
Yeah, it has. I mean, it's been priced in the 10-year bond market, and 10-year yields on US Treasuries are fairly well correlated to the price, the move higher in dollar yen. But I think any further gains in dollar yen are less likely to be driven by expectations of further tapering by the Fed, and more driven by whether or not Shinzo Abe, the Japanese Prime Minister, embarks on further reforms to the Japanese economy, and also the likelihood of further monetary easing by the Bank of Japan. April next year, we're looking at VAT rates going up in Japan, and I think the Bank of Japan could act to offset the tightening effect that will have, trying to keep monetary policy fairly loose, and that should keep the yen fairly weak and keep the Nikkei pushing higher.
So what's your 1, 3 and 12-month projection for this pair?
Well, certainly over the next month or so, I don't really see too much change. Certainly looking around about 102 over the next month or so, but 3 months out, I think the likelihood is that we're going to see potential speculation about a further loosening of monetary policy from the Bank of Japan. That should continue to undermine the yen, and I think we'll see a move to around about 105.70. That's the next key level that I'm looking at on the dollar yen. It's a 61.8 retracement level of the highs that we saw in 2007, around about 124.20, to the all-time lows in 2011. We haven't as yet hit that. I will be very surprised if we don't hit that in the next couple of months. So 105.70 over the next 3 months, stronger dollar, weaker yen.
Okay, thanks for that, Michael. We'll, of course, have more on the Fed rate decision from Diran McDermott in her interview with the Royal Bank of Canada. So do check that out by just clicking back. I'll see you tomorrow, but for now, bye-bye.